I am an early investor in KEYNO, the maker of the first dynamic CVV2 code technology that integrates with already issued credit, debit, and prepaid cards to prevent online fraud. KEYNO is offered in collaboration with Visa to card issuing financial institutions. The company, which I believe has the potential to become a key player post-COVID-19, is currently raising funding via the equity crowdfunding site WeFunder. The link is in the episode description. For as little as $100 investment, individuals can be part of the next step towards getting KEYNO's technology onto their smartphones so they can make more secure credit, debit, and prepaid card purchases online.
Starting your journey to financial freedom. Now. You're listening to the New Investor Podcast.
Okay, so I guess you all just heard in the pre-roll that for as little as $100 investment, you can become an investor in a startup like KEYNO that could very well change the outcome of your financial future should it ticks all the boxes and becomes a successful company. Now, allow me to give you some pointers into how to make such a move and what you need to look out before making your decision to invest into a startup. A startup is initially initiated by an entrepreneur. In the case of KEYNO, it was founded by technologist and serial entrepreneur Robert Steinman, whom I'm trying to get on the show, by the way, who certainly intends to grow the business and position it to become successful and influential. Now, startups have a high uncertainty and a high rate of failure. However, a minority of them become what we call unicorns, which are privately held companies that reached a valuation of $1 billion minimum. As you can probably judge, this is a high-risk investment, but with the potential of a very high return in the long term. This is not a short-term investment. It is important that you understand that before your investment brings any form of returns, the company will have to take its time to grow and gradually increase its value. Now, there are different ways to get a return on your investment by investing into a startup. But in the case of KEYNO, for example, should you decide to invest in it, we'll issue a simple agreement for future equity, or otherwise known as a SAFE, which will convert your investment into stock at a later date should the company raises what we call a priced round, which is initiated so that major investors, such as venture capitalists, can buy shares of the company at a set share price, at which point your investment will convert into equity in the company based on its new valuation. Now, in KEYNO's case, should you be an early investor, we are betting that the company will be valued at more than $6 million once that priced round is completed. Sorry for the technical stuff, but that was not the reason why I invested in KEYNO. Usually, I would invest in a vision and into a team. Now, I do believe that e-commerce in general will become a much bigger part of our lives, especially after the disastrous COVID-19 crisis. There will be a behavioral shift towards more consumption online, which means we will need companies like KEYNO to protect us against online fraud. Now, are they going to succeed? No one knows at this stage, but I believe there is actually the right team in place with the right level of expertise to deploy this new technology onto the market and into our wallets. Now, there is a limit by law to how much you can invest as a non-accredited investor, and it will be based on your current level of income and net worth. But they fit everyone. Everyone can invest. Bear in mind that this is money you should be ready to lose. And please take my advice. It is to know exactly where you stand financially and if you can handle the risk before making such a move. Now, you can have a look at all of this by simply following the link on the podcast episode description. In the meantime, stay healthy and stay invested.